Fetch AI in the past few hours has been seeing a bit of a bounce to the upper side after we continued to hold above a significant low below the 0.71. And on today's update video, I will be discussing a potential reversal scenario to the upper side over here, and above all discuss an additive structure that is playing out here on the charts. So make sure that you stick around till the end of the video. And you can see that here on the 4-hour chart, we have a significant low below the 0.71, where Fetch AI has continued to find support. And as a result of that, we have now seen the formation of a double bottom, which is a bullish pattern that breaks to the upper side, having the minimum target areas for the breakout being given by the height between the tops and the neckline. So we can get that height between the neckline and the bottoms down there, and then place that height above the neckline, and on so doing I get a minimum breakout target area to the 0.979 as my minimum target area. And for that breakout to play out, we need to see higher prices here on the Fetch AI chart in a move that should easily give us a break above the high we made above the 0.844 in the next coming hours. The moment we manage to break above that significant high, which is also the neckline, then we can easily continue pushing higher as we break out to the 0.97 in the next coming hours. So that is the first possible scenario that can play out here on the Fetch AI chart. Alternatively, in case we lose that bullish momentum and maybe at some point we lose our significant low below the 0.71, then that will be a clear indication that we will continue seeing lower prices and also obey this additive structure that I have been observing from the highs we made above the 0.992, where you can see that I have been terming that initial drop as the formation of that wave 1. Then we saw a bit of a bounce in the formation of that second wave into the minimum target areas for the wave 2 highlighted on the chart, an area within which we got rejected, starting a pullback in the formation of these wave 3 whose minimum target areas were given by connecting the fib extension from the high of the wave 1 to the low of the wave 1, then connecting the Fibonacci's to the high of that second wave. And you can see that the fib ratios 1:1 above the 0.738 was fully maximized. Then we saw a bit of a bounce over the weekend in the formation of these wave 4 into the minimum target areas, an area within which you can see that we got rejected, and that could be the start of that pullback in the formation of these wave 5 to the downside, whose minimum target areas can be given by extending the fib extension to the high to the low of the wave 3 down there below the 0.71. And on so doing, the area that you will need to pay attention to in the formation of these wave 5 lies on the fib level 0.618, and that lies above the 0.586 as your next target area. So for now, we need to pay attention to our key area of support above the 0.71, because the moment we lose it, then that will be unlocking lower prices in the formation of these wave 5 over here. But as long as you continue holding above it, continue seeing that bullish momentum, then we can easily see a breakout out of this double bottom to the 0.979 as our next target area. So that is all that I'm expecting here on the Fetch AI chart, and let us be patient and see how that plays out, and I will ensure you stay up to date.